3 markets, thousands of instruments, infinite opinions online. Everyone has a take. Crypto traders say stocks are slow and boring. Stock traders say crypto is gambling. Forex traders say both are too volatile or not volatile enough. And you're sitting there trying to figure out which one is actually right for you. Here's the truth. There is no best market. There is only the best market for your specific situation. And in this video, I'm going to give you a simple decision framework, 5 factors, and by the end, you'll know exactly which market fits your life, your capital, and your trading style. Not financial advice, just education. Let's get into it. Before we compare markets, you need to understand what actually matters when choosing one. Not which one made someone else rich, not which one is trending on social media right now. 5 factors that determine which market is right for you. Factor 1, time availability. Factor 2, starting capital. Factor 3, volatility tolerance. Factor 4, structure preference. Factor 5, learning curve. Every market scores differently on each factor, and your life scores differently too. Let's go through each market and score it honestly. The Forex market is the largest financial market in the world. Over $6 trillion traded every single day. It runs 24 hours, 5 days a week. London, New York, Tokyo, Sydney. The sessions overlap and create predictable windows of high activity. Time availability, excellent. You can trade early morning before work, late at night after work. There's almost always a session open that fits your schedule. Starting capital, low barrier. Many brokers allow you to start with small amounts. But, and this is important, small capital with leverage is a double-edged sword. Leverage amplifies both gains and losses. Most beginners blow accounts not because the market is bad, but because leverage removes all margin for error. Volatility, moderate and predictable. Major pairs like EUR/USD and GBP/USD move within ranges. Volatility spikes at news events and session opens, which are predictable and avoidable if you choose. Structure, highly structured. Session-based timing, clear liquidity windows. Smart money concepts apply very cleanly here. False breakouts, stop hunts, and liquidity sweeps are textbook in Forex. Learning curve, moderate. The mechanics are learnable, but the psychological discipline required because of leverage is high. Best for someone with limited capital, flexible time, who wants clean price action and is willing to learn leverage management carefully. The Indian stock market, NSE, and BSE operates from 9:15 a.m. to 3:30 p.m. IST. 6 hours and 15 minutes, 5 days a week. Nifty, BankNifty, individual stocks, options, futures. Time availability, fixed. You must be available during market hours. If you have a job that runs through market hours, intraday trading is not realistic. Swing trading or positional trading works, but requires a different approach. Starting capital, moderate to high for meaningful returns. Options trading allows smaller capital, but options have their own complexity and time decay risk. For cash equity, you need reasonable capital to see meaningful rupee returns. Volatility, moderate with spikes. BankNifty is highly volatile. Attractive for traders, but dangerous for beginners. Nifty is more measured. Individual stocks vary widely. Structure, very structured. SEBI regulations, clear market hours, F&O expiry cycles create predictable volatility patterns, especially on Thursday expiry days. This structure is actually an advantage. Experienced traders use expiry mechanics to their benefit. Learning curve, high, especially for options. Greeks, IV crush, expiry dynamics. There's a lot to learn, but the community is massive in India. Resources in Hindi and regional languages are widely available. Best for someone based in India with daytime availability, moderate to good capital, who wants regulated structure, and a large local trading community for support and learning. Crypto never sleeps. 24 hours, 7 days a week, 365 days a year. No sessions, no fixed hours, no holidays. Time availability, complete flexibility, but also a complete trap. The market is always open, which means the temptation to always be trading is always present. This destroys discipline faster than any other market. Starting capital, lowest barrier to entry. You can start with very small amounts. But thin order books on smaller coins mean price manipulation is easier and more frequent. Stick to Bitcoin and Ethereum for cleaner price action. Volatility, highest of the 3. Bitcoin can move 5% in an hour. Altcoins can move 50% in a day. This volatility creates opportunity, but also creates account-destroying moves for undisciplined traders. Structure, least structured, no central regulator, no circuit breakers. Wash trading exists. Volume data isn't always clean. Smart money concepts still apply, but with more noise and more aggressive stop hunts than other markets. Learning curve, medium entry, but high mastery. The basics are accessible, but reading crypto markets correctly, especially understanding on-chain data, exchange flows, and manipulation patterns takes significant time. Best for someone with high risk tolerance, flexible schedule, small starting capital, who can maintain strict discipline in an unstructured environment. Now let's make this simple. 3 questions. Answer honestly. Question 1. When are you available? Fixed daytime hours only. Indian market fits best. Flexible anytime. Forex or crypto. Nights and early mornings. Forex is ideal. Question 2. How much capital do you have? Very limited. Crypto or Forex with micro lots. Moderate. All 3 are viable. Good capital, Indian market gives best rupee returns with lower leverage risk. Question 3. What is your risk tolerance? Low, Indian market or Forex major pairs. Medium, Forex or Indian market derivatives. High, crypto, but only with strict risk management. Here's what nobody tells you. The market you choose matters less than the skills you develop. Price action works in all 3. Support and resistance works in all 3. Liquidity mechanics, stop hunts, volume analysis, all 3 markets follow the same auction principles we've covered in previous videos. A trader who understands how markets actually work can operate in any market. The biggest mistake beginners make is market hopping, trying Forex for 3 months, then switching to crypto, then trying Indian stocks. Never developing deep understanding in any one market. Pick one. Learn it deeply. Understand its specific behavior patterns, its session timing, its volatility windows, its manipulation tendencies. Master one market first. Then expand if you want, because the edge isn't in choosing the right market. The edge is in understanding one market deeply enough to read what's really happening beneath every move. 3 markets, 5 factors, 3 questions. Forex, flexibility, leverage, session structure, Indian market, regulation, community, fixed hours. Crypto, accessibility, volatility, no structure. None is better. Each has a home. Find the one that fits your life, then commit to learning it properly. Drop a comment. Which market are you currently trading, and why did you choose it? I read every single one. See you in the next video. Stay disciplined.